Governments around the world are watching Bitcoin warily. They fear that it thwarts their control of the economy by bypassing their capital controls, facilitating criminal activity, and consuming enormous amounts of energy. They also worry that it can be shut down by hacking not one but thousands of computers at once, a 51% attack. To do so would require stealing the private keys from millions of users storing their bitcoins in exchanges or third-party custodial services. What's next? The latest attacks have been blamed on Russian cybercriminals, who continue to target Ukrainian law enforcement agencies, military installations, and civilian internet providers. Ukraine claims that these attacks are part of a campaign to collect information on the deployment of Ukrainian troops, including their locations and activity. Pro-Russian hackers are also targeting satellites used to monitor troop movements. In addition, the Ministry of Justice in Trinidad and Tobago was recently targeted with a ransomware attack that compromised user data and disrupted court services for several days. Despite these ongoing attacks, many government officials have shown increasing support for Bitcoin. For example, a bipartisan group of legislators has formed a new congressional crypto caucus. This is a promising development because it allows the cryptocurrency community to work with lawmakers to create bills that will advance the industry. In addition, the SEC has launched a new initiative to help protect crypto investors. The agency has established a new cyber unit that will focus on developing new tools to prevent and prosecute cyber attacks against the cryptocurrency sector. It is important for the SEC to step up its efforts because these attacks can be very costly and have serious consequences. While many politicians have shown support for Bitcoin, others have warned that the cryptocurrency could become a vehicle for illicit activity. This is particularly true because the digital asset is highly volatile and lacks a central authority. As such, many investors have been wary of putting their money into Bitcoin. On Thursday, President Trump signed an executive order establishing a digital asset reserve to hold seized crypto assets. This move sent Bitcoin prices on a brief price spike, but it is unlikely to have a significant impact on the market. The reserve is meant to be funded with cryptocurrencies seized in criminal or civil forfeiture proceedings. As a result, it is likely that the reserve will not include any of the more popular cryptocurrencies like Bitcoin, Ether, and Litecoin. In addition, the reserve will not be able to purchase Bitcoin directly because of the strict rules governing its use in the US. The EU's crackdown in an attempt to curb terrorism financing and money laundering, European Parliament members have voted to crank up crypto monitoring. This includes requiring companies to collect more data on users, and banning tools that enable anonymity. The new rules will also require crypto firms to register with the national authorities and comply with anti-money laundering (AML) standards. They will also need to report suspicious transactions. A new EU agency will be responsible for overseeing laws against money laundering and terrorism financing. It will directly supervise the riskiest institutions. The new laws will be implemented starting in 2026. However, EU finance ministers must first approve them as law. some experts fear that the new regulations could harm the industry. They may push startups to relocate to other countries and discourage EU residents from investing in cryptos. This could lead to a shortage of talent and slow the industry's growth. Crypto-friendly banks are also at risk of losing their edge in the market. In a recent X post, Patrick Hansen, the EU strategy and policy advisor at Circle, argues that these new rules will make it harder for them to compete with established financial institutions in other parts of the world. One of the most controversial proposals is a ban on mining Bitcoin. The move would affect the entire proof-of-work crypto community and hurt many of its biggest players, including mining pools. It would also stifle innovation and invade users' privacy. Another controversial proposal is the introduction of tax rules for crypto assets. The new regulations will force all service providers, regardless of size, to report on transactions involving crypto assets for clients who reside in the EU. This will help EU governments to monitor funds and catch tax evaders. Nevertheless, some observers believe that the new measures are not necessary. They may hinder the growth of the crypto industry, and could even damage the reputation of the EU. They will also reduce the transparency of the market and increase costs. Despite the criticism, Batten remained optimistic about the future of Bitcoin. He believes that the new regulation will not be as bad as some people are predicting. He believes that the ESMA and the ECB will only propose methods to disclose cryptocurrency sustainability, rather than introduce a ban on Bitcoin mining altogether.